All right, we are back. Today we're going to do a little bit different format. So if you are listening, it's still going to be a great experience. But if you're watching on YouTube or Spotify, we actually have some kind of slides to go through. And maybe this works.
Fancy.
Maybe it doesn't. Who knows? We're here to answer the question. AI infrastructure. I think I've read every article that comes out. I get fed it by ChatGPT, and my life revolves around this. And so there's a big question around, is this a necessary build out, or is this a bubble, or is it both? Is it somewhere kind of in the middle? And so we want to kind of go through some of the stats and figures and major talking points from just tons and tons and tons of articles that have been released really over the past few months. And
also,
yeah,
we're sorry we've been gone for so long.
It's all Justin's fault. He's never home. He's always on the road.
I am. That's true. You also were on the road though too this time, Mr.
I've been on the
Marathon.
road. I've been on the road,
right?
But I did do my marathon. So for anybody who's been watching, I think I talked about it on some of the other podcasts. Mission accomplished. We got it done. It really sucked, and I don't know if I'll ever do another one. But hey, check the list off. Got it right here.
It's real.
The medal.
Look at that.
I sleep in it, so it's real.
Is that one of those medals that's like a participation trophy type of deal? Is that what this is?
Well, I'm not Kenyan, so I didn't get first, second, or third, but I got the medal that everybody from fourth to my position got.
If I got a participation trophy for that, I'd still be very proud of that. So good job, man. Congrats.
Yeah, we got it done. Doing hard things.
Did you do it with your dad? Who did you do it with?
Yeah.
Your dad. Okay, that's cool, man.
He does ultra marathons. And so it was really easy for him. It wasn't hard at all. Very hard for me. My whole right leg cramped up at mile 10, and I had 16.2 more miles to go. Very hard to run when your leg doesn't want to work, but we got it done, man.
Yeah,
we got it done.
Yeah. Well, congrats, man. That's awesome.
Thank you, dude. I mean, I feel accomplished. I think I'm going to taper my expectations with my next side quest that I do, because that was a lot of training, a lot of time. But I'm in the best running shape of my life, so I'm gonna keep running it. That's been kind of therapeutic in a way. But getting back into pickleball, getting back into jiu-jitsu, I don't know if we need to tell everybody how I beat you and Sarah 2-on-1 in pickleball. Repeatedly.
What did we play afterwards? I can't remember. It was another ping pong. Tell me about that. Yeah. I had to go play you in ping pong so I could redeem myself from the pickleball court.
That was a ping pong table for ants. It needed to be at least 3 sizes larger.
That explains my skills on it, man. If I can drop dimes on there, it's difficult.
I'm
looking a ping pong table for ants.
I'm looking at buying a ping pong table and throw it in the garage just so I can avenge that
practice.
Loss.
Hey, man, I've got a long history with ping pong, so don't feel bad. I take pride in my ping pong abilities.
You're a ponger, dude.
I'm a ponger. All right, my bad. Distracting, sorry.
All right, getting into AI infrastructure. So, no secret, I think everybody knows this, maybe you don't, but this is the largest capital migration in modern history that's leading into the rush to build out as much AI infrastructure as possible. And right now we're talking to the tune of billions, tens of billions, hundreds of billions of dollars per year that are going into, building out data centers and the required energy infrastructure that it needs to power. This is not like the AI revolution is not limited by chips or by silicone or even capital. It's limited by energy, and that's where most of the build-out's going to come from. And so,
sorry, I'm going to ask you because you do have a lot more knowledge on this subject matter than I do, but what is the capital number being deployed this year, like into AI infrastructure? Do you know that?
I have it later in here. I think this year it's somewhere the tune of 250 billion.
Good grief. Yeah.
And that number is projected to go up every year for the foreseeable future.
Mm-hmm.
It's a lot of money. It's a lot of money, and that's one of the big things that in this question that we're trying to answer. Is this a necessary build out? Is this a boom or is this, a bust? Is it Is it another bubble? And the argument there is that the capex needed to build this isn't necessarily supported by the revenue that these companies are currently generating. And so we'll kind of dive into all of that. But yeah, it's like, how sustainable is this type of investment year over year over year? We're talking about the reallocation of lots of funds, because where do these guys raise from? They raise from, large institutions and banks and all of that. Where do they raise from? Well, it's because they're from other people, right? It's
Mm-hmm.
this is
Mm-hmm.
all the money comes from somewhere, right? And so
Right.
once you suck up everything into this vacuum and you're building to the tune of trillions of dollars, is there enough capital to be able to pull this off? But if you look at what's at risk, this is, from their viewpoint, OpenAI, Microsoft, everybody else that's building these large language models on the quest to achieve super intelligence, or AGI. It's a zero-sum game. There's one winner,
Mm-hmm.
right?
Right.
And if you are standing to be the winner at what is arguably the most impactful technology in the history of our human race, potentially, what are you
Speaking
willing to
of,
spend?
right.
What are you willing to spend?
Everything.
It's a land grab. What do you spend
Mm-hmm.
everything you could possibly do to be able to be the winner. And OpenAI definitely at this point has a very clear lead, I would say, in terms of definitely from a revenue standpoint.
I use it.
This is going to be the foundation of, not only, it's not just ChatGPT, it's robotics. Robotics have had a huge week.
Mm-hmm.
Figure AI, Neo, has been announcing their new humanoid robot that is going to be, yeah, it's pretty remarkable and it's pretty friendly
I
looking.
saw that.
But yeah,
Right.
like, do your dishes and change your clothes and like clean the house and all of that. But it's all trained on AI. All robotics will be, right? And so this is going to be the base layer to what everything is built on, right? Whereas there's no apps today that are being built that are not being built as AI is the foundation. Whereas everything that came
Mm-hmm.
before this has now had AI integrated into it. Now it's going to be an AI first approach from here on out, right? So there's a lot at stake. And that's why there's so much money that's going into it, because everybody wants to be the winner. It's the closest equivalent I could make would be if there was one company that owned the internet,
Right. Man,
right?
that's crazy, dude. That's scary too. I know we've had our, you know, late nights discussing what's going to happen, but man, dude, that it is some crazy stuff. And yeah, to think that one company could own that kind of power is pretty freaking wild and scary.
Yeah. I mean, it brings up a whole lot of other questions, and I think we could probably have entire episodes dedicated
Right.
to,
We need to have one of
if
those.
yeah, if like AI plays out the way that we think it will, and society was to enter into what many think would be some sort of like utopia, where we've cured cancer and other diseases, and we're living longer, and quality of life is higher. Um, yeah, to get to a utopia, you have to go through a dystopia, though.
Mm-hmm.
And so large
Yeah.
amounts of unemployment, all that kind of stuff. But we'll save that for another episode.
Yeah. Yeah. Well, yeah.
So moving on. So data centers are really, it's the new oil fields. I mean, it's a great
Mm-hmm.
analogy. Every investor, developer, and operator wants a piece of the action. The demand is absolutely real, and compute has become just absolutely critical. And to build the compute, you have to have the infrastructure. Um, Vacancy rates, let's talk about this from the data center side, are at historic lows, 2.3%. And this is I've even seen lower than this, and this is in North America. And 73% of new capacity that is coming online, so the new pipeline of new data centers are coming on, 73% of that's already leased. And we have more capacity coming online than ever before, and
Right.
it's already
Right.
leased. So these groups are trying to lock
Man.
in every way that they possibly can, right? On the construction pipeline, we've got 5.2 gigawatts under construction in primary markets. There's at least 30 gigawatts of capacity that is planning on coming online. This is for the U.S. And then global investment, like we said, projected to surpass 1 trillion between 2025 and 2030.
That's wild. Good grief.
Power demand
Overall
expected to
power
rise.
demand, is that worldwide power demand increased by
No, this is,
160?
I think that is actually worldwide power demand, because that number is much lower than I anticipated. So that's 165% by 2030.
Mhm.
For the
Right.
US, I've seen 10x
Oh my
power
gosh,
demand
yeah.
growth by 2030. And we're seeing, if we want to meet this demand, the grid build out alone would be close to $1 trillion, so 720 billion, give or take. But we know that that's not going to happen for a variety of reasons. We can kind of talk
Right,
more about that.
right.
But there will be some infrastructure built on the grid for sure. Let's put this in perspective. Let's contextualize how big of an infrastructure build out this is. And so just from 2025 to 2028, we're looking at, probably close to $3 trillion. The interstate highway system from 1956 to 1992 cost $500 billion. All the roads in the US. The dot-com fiber build out in the 1990s was, I think, somewhere around like 20 billion. Oh no, it was about 100 billion, which is still a lot. That's a lot of money. The Rural Electrification Act, 1936 1950s, $550 million initially. The largest infrastructure build out we've ever seen, and it's not even remotely close.
Yeah, I was gonna say combined. All right, you could probably
All of
combine
those, yeah,
everything
and
else,
then
yeah.
multiply it a few times over, and it's
Right.
still larger,
Man, that's
right?
remarkable. But I did well, this is going to the basically the question we're talking about here is like, I know these projections are what they are and they're based off of data and expectations, but how much of this is actually going to come to fruition? And that's basically what I know we're going to want to get at here. But
Yeah, I think
um,
there's a lot of projects that won't ever see the light of day,
right,
but
right,
I don't doubt that there's any question around the demand
right,
from hyperscalers,
right,
right?
yeah,
There's a million things that can kill a deal, right? Regulatory, permitting, communities nearby, not enough water. Fiber's less of an issue, but it could be a deal killer. Capital is definitely not a constraint for anybody that's building anything, as long as you know what you're doing. But yeah, projects will kind of come and go, but the demand seems to only continue to increase in perpetuity. And so I guess one little asterisk is you can spend all day looking at these stats and find completely different stats from different houses. And so don't hold me to these exactly. These are the ones that we pulled. They tend to range, kind of all over the place. But looking at the power generation deficit crisis, current capacity, and this was as of 2022, so it should be a little higher than this. So let's just say about 20 gigawatts
hmm,
nationwide. And the required capacity by 2027 is what they're projecting is 95 gigawatts. And so we would need 78 gigawatts over the next 5 years to be brought online, right?
yeah. That's a lot of power.
So talk to me about the on grid side of the world, a little bit
Hmm.
better than I do. When you're putting in a load request, what's the size? What's kind of the size cap that you can get, or what are you seeing in that space?
Well, you can put in as much as you want, but with SB6 now having passed, and I'm talking Texas in particular, right? But that does end up changing the viability of some of these requests that people are putting in. And it's intended, I think, really to weed out some of the tire kickers or people that are trying to exploit kind of the gold rush that we're seeing right now by just getting an FEA in hand from a utility and then trying to flip it. They're requiring you to pay for a study, and that can get very expensive. I think they can go up to $1 million for a study. That doesn't mean they're going to require that, but they can require that. But typically, I'm seeing people put in requests for 200 to 400 megawatts, and the time frame of those, depending on where you're at in the queue, and also kind of what utility or what region you're asking for it in, those can get kicked out a substantial amount of time. I mean, you're talking even just to get the study done, like 12 months to 18 months. just to get the study done.
That's just one
And
phase.
right, right, and that's just one phase. So like, there, while there's no cap on how big of a load you can ask for, you're limited by transmission and distribution, and you're limited by what you're willing to pay for that study. But there's not, at least I'm not aware of any size limit that you can ask for. But I mean, some of them they can weed out real quick. It's not feasible to think there's going to be transmission lines that are going to take a gigawatt or 2 gigawatts or 4 gigawatts somewhere. Most likely, right? Most likely there's not going to be anything like that. So they're going to have to build that out. And I mean, I think if you're talking 2 to 400 megawatts or more, you're probably looking at 3-4 years before you could reasonably have something there. So
And
it's
how much changes in 3 or 4 years as well, right?
all right,
It
right.
could be
That well, that's
just from like
man,
a chip perspective, and how many, like, now you have these
uh-huh,
like single racks that are a megawatt, right?
right. Well, and
4 or
I
5
think
years, that could be double that. It could be more than that.
totally, totally. And if you look at like Bitcoin mining, this is where there are some correlations. At least I think there's going to be a lot of correlations. Is that we've seen such tremendous efficiency gains in Bitcoin mining over the past 5 years. Like when we got Jay going, highest hashing machines were like they're coming out with 100 terahash machines. Well, we've got our site at Emory, and it's we're about 3.5 megawatts right now. We're doing over 200 petahash. So you couldn't do that or anything remotely close to that a few years ago. So the amount of energy you need to reach a certain level is a lot less actually now than what it was previously. And that's due to the efficiency gains in the machines and just kind of, things getting better over time. And I do think that the AI world is going to see the same kind of growth in efficiencies. And, while right now they kind of will look at a minimum of, say, 250 megawatts for a site, well, I think 5 years from now, 100 megawatts is probably going to be a lot closer to what 250 megawatts is right now. And so, that's something to keep in mind when you're looking at sites and things you want to take down is while today it might only be good for Bitcoin mining, 5 years from now, that might be an AI site. And obviously, valuations and numbers are very different. Now, I think just like Bitcoin mining, man, we used to be getting in the good times, you're getting like, $42, or I'm sorry, $420 a petahash. Now you're down to like, $49 a petahash. So things change, right? And the margins change and they shrink. And I think you would see that in the AI world as well. But uh, you know, I so I that's the problem kind of is like we plan for today based on what information and data we have today. But when you got timelines of 3-4 years before you're going to see the power that you're looking for get there, I mean, dude, look how fast things are changing now. There's going to be a dramatic difference in what an AI operation looks like 4 or 5 years from now from what it does today. Just
Yeah.
it is. I, I I think it's inevitable that we'll see that kind of efficiency gain, but it makes it hard to plan. Because when I want to go get
Yeah.
a line, I'm getting it today based on what it looks like today. Here's I can model it out. Here's what it's going to look like. AI changes so fast, and you got such a long time frame before you're going to get that level of power there. It's going to be complicated, and it's going to be interesting to see what happens. I think that's why there's a lot of these opportunities for kind of that bridge power right now with natural gas. I'm not trying to plug you guys, but what you're trying to put together, that kind of stuff is it allows you to basically plan your operation, get online now, and run a productive, effective, profitable operation while you wait for the grid power to get there. And during that time, things may change, your plans may change, but you're running an operation right now that was planned for based on today's economics, today's valuations, today's servers, today's equipment. And when the grid power gets there, you're gonna probably have an opportunity to kind of see what the market's done over that period of time and then plan for that.
I think I mean, this is kind of my own thesis, but if I'm looking at like where the puck is going, not to plug us, but like, I mean, I believe in what we're doing, and I think it's solving a huge problem. But um, off-grid power, I think, will make up a larger percentage of the overall mix for AI power in the long run because of all the problems that we're talking about here.
Yeah, dude, it's gonna have to, man. It's
But there's
gonna
also
have
the
to.
NIMBYism. There's the scrutiny. You're seeing these mega projects that are multiple gigs that are getting canceled like at the 1 yard line due to
Mhm.
a lot of people in the community around there.
Right.
They're talking about their retail energy rates that are going up. Water's getting
Mhm.
drained from municipalities. They don't want the buildings there. It's yeah. And
Yeah,
I think
it's
you're
gonna
going to see
have
more and
to.
more data centers are going to get pushed to the fringes, particularly as they go up
Right.
in the power rating, to be able to build
Right.
these super, super large sites like you're seeing with like Abilene and other places where you have plenty of land to be able to pull that
Mhm.
off. And so I think that's ultimately, kind of where the puck's going. But,
Well,
as
and
we're talking
also
about here,
just the reality of, like, I don't know how constituents are gonna feel about being basically the ones building out the infrastructure for that AI that in turn is taking their jobs, right? Like,
yeah,
these are real things. These are like political side of it that I think doesn't get talked about enough. But like, you're building out like your replacement right now, and so at some level, it's like, man, people are not going to want that to continue to happen at some point. I believe that, and so when you're talking like, I'm going to build out the utility level grid for AI that is going to end up taking your job probably, and it's going to make things very different than what you ever probably could have imagined things being like as a kid. I think it's gonna be tough to justify putting those all on grid, and it's like, if you want to have this kind of level of power, which again is part of what SB6 I feel like is kind of looking towards, is like, you're going to also have to be a contributor. And so your own power generation can remove a lot of the political obstacles some of these groups are going to face. But also it's probably going to be a necessary thing for the future, because like when people worried about Bitcoin mining and the power usage they have, we curtail during peak times and when the grid is needing that power because we're incentivized. The incentives are not enough for AI groups to shut off. And so they're not going to. Like, you're still driven
yeah.
by the dollar, so they're not going to. And so I think it's inevitable. You're going to have behind the meter off grid power being a large portion of what's coming on, because they're just I mean, the timelines the utilities move in, it's not feasible to think that they're going to be able to handle that. They're just not.
Well, also think about it from a national security perspective as well.
Hmm.
Like, what is the likelihood that World War III is fought in the same way that we fought every other war, right? Especially with like in the
Right.
age of AI. I think it's going to be a battle of like AI models, and there could be
Hmm.
obviously, a drone component or now like humanoid soldier component, but AI is going to be
It's
the base
crazy
layer
we're
that
saying
is going to
that.
drive all of the changes, in warfare, right? And so if you think about AI being powered, on grid, it would be very easy to, for one, take out all of the citizens, like all the power for the citizens, but then take out your AI, right? So
Mhm.
wouldn't you want your AI to be completely sovereign on its own grid,
Right.
right? That you can completely control, for one, to be able to protect citizens, but to be able to protect the AI, like it's a smarter move. And so if you think about like getting back to like this AI infrastructure, like our bottleneck here is the fact that we just simply don't have enough power and infrastructure to turn on GPUs. But now let's contextualize that in the world stage, right? So Trump and the president of China, have been meeting a few times because now they're having this trade battle, but kind of back and forth. China has built significantly more power generation than we have, like orders of magnitude larger, and they're doing it much faster than we are, right? And so they don't have the same power constraints that we do, right? So they can bring on as much compute as they possibly want. So now going back to zero sum game, okay? One company is going to control probably most of the AI. What are the chances that it becomes a Chinese company? And would you want a Chinese company to control all your AI? Or would you prefer it to be us? It's the lesser of two evils. Which one would you prefer? I'd kind of prefer it to be us, right?
Right.
But they don't have the same power challenges that we do. They are building massive. I think they just built the world's largest dam, where it's like, I think it's like 40 gigawatts or 45 gigawatts
Okay,
in
great.
a single location.
Yeah, that I would
They are
prefer it to be us
literally
too, but
doing everything they possibly can to bring on as much power and as much compute as possible.
isn't it wild
That's
what's
the
going
game.
we're
That's the
even
game that we
talking
have to
about, dude?
play. Yeah,
Right.
it's nuts. We
This
wouldn't be
is
talking about this
crazy
years
though.
ago.
Oh my gosh, yeah, this is nuts, man. And but it's very real. And yeah, I mean, I think the US has to get serious about the generation side of this. Like it's great that the AI companies are, they're propping up the economy right now, it feels like, and they're such a large part of kind of our economic machine we've got going, and managing to continue to grow despite some of the employment issues that we're seeing, and the kind of weakness in the macro kind of side of the economy. But like I feel like the AI growth is what's continuing to prop us up and propel us forward. But man, the generation side, like you're basically laying out, is a huge component, and so much of that is like state level type of stuff, not necessarily private companies trying to build out, their AI infrastructure. This is like we need this from like the feds and the state level down, looking at this for the serious issue that it is, and like we've got to get more generation online. We just have to, because you're right. Like competing with China and trying to make sure that they don't beat us to, the end goal of the AI race it is very important. And I was actually trying to talk to my uncle about some of this the other day, and I don't. We're all in the same little bubble, right? Of what we talk about, and it's been that way about Bitcoin, and I feel like it's that way about AI stuff right now too. Um, we can all talk about how serious this is, and like how important it is to be focused on being number one in it and making sure that we achieve it before they do. But man, I don't think most people understand how like serious this is and how close it is. Like how
Yeah,
close to
yeah.
when this is actually going to be a reality for what we all live in. I don't feel like I don't feel like the vast majority understand that at all.
No, no, not at all. Not at all. I will say the DOE, I think, is making a lot of moves.
Mhm.
So Secretary Wright and everybody in the DOE, they have definitely pulled back on some, or proposed to pull back on some of the environmental regulations that were really hamstringing energy companies in a way, and so it's rolling some of that back to be able to, ultimately bring on more power. Um, they're rolling back some of the renewable stuff, some of the hydrogen stuff. Um, a lot of that. There's been a lot of kind of criticism
Mhm.
of that, but I think it's been honestly great for, if this is what we're solving for. I think it's all great.
Right.
To be honest, let's talk about some of the new. It's a land rush, so let's talk about some of the new builders that are entering this space. There's been, it seems like every day, just new mega projects are being announced. Now, asterisks, will they see the finish line? Who knows? Who knows? I have some horses that I want to bet on, and we'll talk about some of those. I'm not going to say which ones I'm betting on, which ones I'm not betting on, because I don't want to be held to it. But I know a lot of things. I know a lot of people, and there's some things I'm skeptical about.
Mhm.
There's some things that I'm really bullish on. But regardless, here's the stats. Here's some of the things. We're going to go through just a handful of projects that are popping up. This has made the headlines. I mean, so much so that my dad, who is not in energy, he's just familiar with what I'm working on, called me and was asking me about it. So Fermi America, they have said that they're going to build an 11 gigawatt project, the total 11 gigawatts online by 2038, but they want to have a few hundred megawatts online over the next year. They have 0 megawatts online today, and they have $0 of revenue today. But they got Rick Perry. They got the Rick Perry name, former, Secretary of the DOE, former governor of Texas, as my uncle calls him, Governor Goodhair. That was the only thing he was good for. He was a little bit before my time, so I don't really know how good of a governor he was or not. He was your time though. I mean,
Oh yeah, he's my time.
he was
I've
your
met
prime
him a few
time.
times. Yeah.
Yeah.
Yeah. I used to work for Kevin Brady back in the day, and I met Governor Perry a few times there, and yeah, I don't have anything bad to say about the guy, man. I think he's all right, and he's had some interesting growth personally over the last few years. You should read a story about him and some of his therapy that he had. I don't want to say it out here because I don't want to throw the dude's business out there. I've seen it in an article though, so I guess it's not wouldn't be me throwing it out there, but you should check it out, man. It's interesting. We'll
Yeah.
talk about it next time.
Well, his name was good for something because I think it contributed to. They had 11 gigawatts and Rick Perry on a pitch deck, and they raised
That's all you need, man.
$2 billion in equity. 682 was during their IPO. So, but they raised 1.2 billion prior in both convertible notes, pref equity, and then lines of credit, and then IPO'd. And last time I checked, they're sitting around like a $13 billion market cap. No revenue, no megawatts, but a really great pitch deck. And so
That
hats off
is
to
that
them.
where a
Like
lot of this
those,
comes from, though? The bubble talk is things like that. Is that
yeah. I mean,
yeah?
if that's the topic of the day, that's kind of where it comes from, right? And so there's a lot of
Mm,
questions around like how will they be able to, support this kind of valuation? How are they going to be able to generate this amount of revenue? I think what's interesting about the way they structure is they actually structured as a REIT. So it's more of a real estate play than anything. And so there's a lot of tax advantages, but there's also kind of a lot of drawbacks in my opinion. But it's interesting. So they're building, it's a combination of nat gas, some nuclear, some solar, ton of land. And as I understand it, they're also building the buildings and then they're going all the way to energized racks, right? And
mm,
then they're just doing a lease rate, right? So all that's kind of rolled into one turnkey, which is not bad. It comes with its own complexities to go that far in the value chain. Honestly, it's something that we're kind of evaluating as well, just because from a timing perspective, it may actually make the most sense if we're solving for the quickest to be able to power a GPU.
mm.
If I can build the power really quickly, but I don't have the space in between the building and the rack to power a GPU, maybe we have to go a little bit further. So it's interesting. It's good. I mean, it's good for, as we're about to kick off a capital raise, it's great for us as a comp, as with Crusoe, who we'll talk about in a second. Another one, Prometheus Hyperscale. I don't know if have you heard anything about this one?
I haven't. Mm-mm.
So this is chaired by ex-BP CEO Bernard Looney, partnering with NG to co-locate data centers with renewable assets in Texas. And what I find particularly interesting about this is that him kind of going a little bit too all in with renewables at BP was one of the straws that kind of broke the camel's back for him being at BP. And he said, I'm just doubling down. I'm doubling down on renewables for data centers. I don't know a ton about this. I've just seen some of the press releases, but I thought that was like really interesting. So it was worth bringing up. It is interesting to see that somebody that was as high up as him, as a CEO of one of the largest energy companies in the world, is getting into this space. I think it's a good signal. But
Right.
once again,
Yeah.
back to the question of the day: does it signal a bubble? I don't know,
I
or is
don't
it
know if that
smart?
signals a bubble, but yeah, I think it's a recognition of the industry as of where it's going. And I heard Jerome Powell talk about this actually a little bit, I think yesterday, or I read it. Talking about whether or not AI is a bubble and comparing to the dot-com bubble. And he basically rejected that idea. And not that I'm like a big fan of Powell. I'm not touting him as if he's the expert on anything or everything, but um, you know, looking at the earnings of some of these companies, we're talking about the ones here that are kind of more, on the other side of it, where it's like they're just raising money based off of potential or what they think they could do. There are companies like Nvidia that just show that this is very real, right? There are real dollars going into some of these projects and real um, companies that are earning, tremendous earnings. Nvidia's, I'm not going to be able to tell you the numbers, but I saw a video about their numbers the other day and they were phenomenal. The growth that they have had on the revenue side and on just basically every aspect of every metric you would want to look at in a public company. They have had explosive growth. So there are real dollars being spent from somewhere, like you said, and that it's driving the whole machine of our economy right now. And
Nvidia's first $5 trillion company, and there's been a lot.
right,
There's been a lot
right,
of. I don't know if you've seen the debate. There's been some charts that show, Nvidia invest 100 million, or probably not 100
into
million, probably a couple
Nokia.
$1 billion into OpenAI. OpenAI takes
Mhm.
100 billion and puts it into Oracle. Oracle takes 100 billion and puts it into,
Right,
and it's like very circular. And
right.
some people say, hey, well, that's just what an economy is. Sometimes some people say that, well, yeah, it was the world's most valuable company propping up kind of this
Mhm.
entire industry because everybody needs their GPUs, which then further
Right,
inflates revenue numbers, their pipeline numbers, therefore the share price. Maybe it just becomes a self-fulfilling prophecy over
right,
time.
right.
I kick myself for not realizing what Nvidia could have been a few years ago, because I was talking with some of
Mhm.
the guys that worked on the energy side of Nvidia for high performance compute, particularly with like subsurface data. And I was like, oh, that's cool. It's a very niche use case. There's was it maybe a few hundred, maybe a few thousand people in the entire industry that would be leveraging like that use case. Having that amount of data that you would
Mhm.
need like high performance compute to be able to crunch the data. And everything to myself, oh man, I mean, this guy's so smart. He should go, work somewhere else instead of like, a video game company like Nvidia. And I got that one wrong. I got that one wrong. I did not did not see this coming. I don't know if anybody saw it coming, but I definitely didn't see it coming.
I did not.
Um,
I didn't see it
yeah,
coming, but I
yeah,
didn't
it's
pay attention to that stuff either. I find out about stuff late, man. Just the way it is. Just can't do nothing about it, man. I find out, yeah, I'm cool with it though. I'm just gonna work forever.
so let's talk about a shout out, FO Permian Partners, Jose Ortega, good buddy of ours. We've had him
Yeah,
on the show. Go
congrats.
back and watch the episode with him. We need to have him back because I want to have him kind of tell us the update of their site, but they're planning on building a 5 gig off grid site in Midland County. Planning on having first power up, I think by like next summer. He's been really helpful as I've been navigating this process. I mean, he got a head start on this before I did, and we may have some ways to kind of collaborate, down the line. Super smart guy, understands energy, understands Bitcoin, understands AI. So shout out to them. Super excited about what they're working on. Let's go into a few that have made headlines recently. Um, these are particularly in the world that I'm kind of playing in these days. So Poolside, another 2 gig off grid campus. They're leasing with CoreWeave for like 15 years. They've raised $2 billion at a $14 billion valuation. They are partnering with somebody on the gas side. I don't remember exactly who it was, but it's pretty much all natural gas. It's at the Longfellow Ranch in West Texas. So yeah, just kind of more signal for the space. And then the one that we were talking about earlier, which we've known these guys since the early days, both Cully and Chase over at Crusoe, and now they're just an absolute behemoth. And every time
Powerhouse. Yeah.
I log into Bloomberg, it's a new article on Crusoe every day. And I'm like, damn, these guys, and they're just churning out progress. They're just churning out new deals and new sites and new funding. They just announced that they just raised 1.4 billion in equity, tripling their valuation in just 1 year to over $10 billion. Right. So if
Congrats.
you
Good
don't know,
grief.
Crusoe started off with just digital flare mitigation, right? So
Mhm.
being able to lower emissions and being able to monetize flared gas at the well site, and they did it with Bitcoin mining, right? And that was pretty much their business for a long time.
Century Oil and Gas. We were their second project they ever did.
You were
That's what
early, man.
Yeah, we were early. We were early.
Yeah.
It was congrats to them though, man. They have done very well.
So similar to Giga, they got into the manufacturing side. They bought a manufacturing
Mhm.
company to solve their own bottlenecks for the same reason that Giga did. They kept mining. I don't remember exactly when they made the kind of hard pivot to AI, but it's been sometime in the last like couple years. They sold all of their mining assets to NIDIG, I believe.
Mm-hmm.
That
I think
sounds right.
so. Right.
And then now they are the number one group that's building Stargate, right? So that's the OpenAI, it's them, it's Oracle, handful of others. And so they have that. And then they're also doing a big old deal in Wyoming, your old neck of the woods, with Tallgrass, right? So a lot of natural
Right.
gas generation to be able to build data centers up there. And according to what they're saying, they've got 45 gigawatts in the pipeline that they are
Damn.
planning on building.
That's wild.
How nuts is that?
That's wild.
Yeah,
Remember when
that's more than like all data centers in the US like combined.
That's pretty crazy.
That's
Man,
nuts.
yeah, and just you remember just a few years ago, we're all like hanging out with Corley and at what was it, the Horseshoe Bay deal, right?
Oh
Well,
yeah.
yeah,
I forgot
man,
he was
there's
there.
it's big time now.
I know.
It's
Hopefully
crazy.
Cully didn't lose my number.
I know. Congrats, though. That is awesome, man. I mean, it's cool
No,
to
it's amazing. It's a super
yeah.
great success story. They're obviously doing, real shit. But going back to the question of the day, boom, bubble, both. I want to just stress the just the big numbers and the magnitude of like what we're talking about here, right? So let's
Mhm.
go into the case for the bubble, right? So there are a lot of new players, not necessarily the ones that we've talked about today, but there's a lot of new players with very little operational experience, right? So there's a lot of execution risk. This is very reminiscent of the dot-com era. This is very reminiscent of even the shale land rush. We saw a
Right.
lot of people who just had no idea what they were doing coming into the space.
And a lot of people made a ton of money. They
Yeah,
still didn't know what they were doing in the space, but they still made a
yeah.
ton of money. So yeah.
Groups raising hundreds of millions, if not billions of dollars on renderings and slide decks. So
Mhm.
it's easy money, right? Because the problem is now so obvious that you don't have to spend so much time educating potential investors what the problem is. Everybody knows what the problem is. So we need to find a way to be able to bring these online. So let's just throw cash out there, right? There's a lot of bad projects. I didn't put this on the slide. There's a lot of bad projects out there too. As with anything, right? You can go to NAPE and you can look. If you've never been to NAPE for the oil and gas industry, you go there if you're probably prospecting. You might be on the small end
Mhm.
of the scale. You're looking to go drill a few wells, raise a little bit of money, put it together. Guess what? There's a lot of shit deals there. Most of them are shit, right? But there are some good ones. And there's some great ones,
Right.
right? So as with anything, there's going to be bad deals, but the bad deals leave a bad taste in a lot of people's mouths who are just spectating, the analysts who are kind of looking at it and saying, oh, this is a bubble, this didn't work out, and this didn't work out. No different than what we've seen in Bitcoin, right?
Right.
So with,
Right.
Scam Bankman-Fried, that was huge, right? Mt. Gox, that was huge. CZ, huge, just got pardoned though by Trump. So we've had our own fair share in the Bitcoin space of bad press, right? You're going to see the same thing in AI. It's just getting warmed up. So there's going to be a ton more than that. So you got the overbuild and speculation. Then let's go into the economics don't quite add up. So there's that argument. So Morgan Stanley is saying AI infrastructure spending could hit 2.9 trillion dollars by 2028, as we talked about, right? So there's a 1.5 trillion dollar financing gap. That's a lot of money, for one, right? So you could take a lot of the money that's being allocated to private equity or venture capital and reallocate that to this. And I still don't even know if we would kind of hit that gap. And then Bain estimates that the sector needs about $2 trillion in annual revenue to sustain this level of growth. Yet, current projections are saying that we're about $800 billion short of that, right?
That's a
How do
lot.
we continue to fund this, right? And so then let's go on to financing and credit risk. So the private credit market for data infrastructure is $50 billion, so up from pretty much zero in 2018.
Wow.
U.S. banks now lend 14% of commercial portfolios to non-bank credit funds. That's a whole nother, that's like a whole nother podcast talking about private credit and whether that is like the next big bubble that
Mm-hmm.
bust, right? Because it seems like it's very
Right.
easy to raise the money. You're doing what institutions have done for a long time, but you're just skirting regulations. And so that's where you've seen these things blow up and they've been able to allocate a lot of capital. Let's talk about the GPU. So S&P Global estimates $15 to $20 billion in GPU refresh cost every 4 to 5 years. We've seen that. We know that GPUs depreciate way faster than just about anything else. And why? It's because the technology is constantly evolving. Every time you turn around, there's new technology. It's higher power. It could be more efficient. It's these 1 megawatt racks now. There's always, and so therefore, if you're holding on to something or you have something, it's going to depreciate at a very, very, so you already have this massive shortfall in revenue. Then you have to add the depreciation on top of it of the money that you've already spent and all this infrastructure. And you have to keep spending that money just to have the latest and greatest to be able
Mm-hmm.
to compete. Right. So the Bitcoin equivalent of that is running the top of the line machines that you are changing out constantly.
Right.
Right.
Which is a problem, right? When you're running
Yeah.
any kind of operation, like, they're expensive.
Very
And
expensive.
yeah, if you're doing that, you're never going to pay them out.
Yeah. So if capital tightens or AI revenue growth slows, these financing structures could cascade throughout the entire system. Right. All this, everything is dependent on kind of one another. I will say that if you listen to like Sam Altman, CEO of OpenAI, talk about the ways that they're going to monetize in the future, and he's like, "Well, we'll ask ChatGPT, what are some of the new ways that we could, grow." Grow monetization over time. I think that as of right now, it's been very cheap. They've released some more expensive options with more power. I think they're going to get more creative over time and the way that they're able to monetize. I think they can continue to spin off new products, not just them, but like just the entire AI ecosystem. And so I think that we're very much in this land and expand. So get as many people on as possible, as many weekly active users as
Mm-hmm.
possible. Once we get them in, we'll see how they're using it. They have all of that data. They can develop entirely new ways to be able to monetize that. So I'm not particularly as worried about that as say other people. I didn't even press record. It's okay. We got the audio for it, so I'm not going to go
All
back and
right.
repeat all of that. So now let's look. Is this durable growth? Right. So we know there's real demand. We know there's real utilization. Look at the vacancy rates. You look at the pre-leasing. It's not speculative. These are some of the most creditworthy companies in the entire world. OpenAI is touting. I don't think we talked about this yet. About doing an IPO. It would be the second largest IPO the world has ever seen, behind Saudi Aramco, which
Mm.
IPO'd at a $1.8 trillion market cap, and they only sold a very, very small percentage of the company. So OpenAI is looking to do the same thing. They're currently valued at $500 billion privately. It would not surprise me if they exceeded that. I think it'll be a
Right.
massively oversubscribed round, and they can raise as much money as they possibly want. This is a paradigm shift. I think that a lot of people are lumping some of the past bubbles together, and they think it's analogous to what we're seeing here. This is a total paradigm shift. This is not the dot-com boom. In the dot-com boom or burst of the bubble, you're seeing really, really dumb companies that really did really, really dumb, novel things, raised lots of money at crazy valuations.
Right.
This is intelligence. It's like it's so smart now, and imagine how much smarter it's going to be in 5 years,
Right.
right?
Well, and I think it's already impacting the way things are done. It's already impacting jobs. It's already impacting, I mean, I think it was Amazon announced 14,000 layoffs from
Yeah.
basically mid management.
Yep.
I think I saw something about there's been 1 million layoffs from American companies this year, and I want to say, I could be totally wrong. I think it's 17% of those are directly attributed to AI. And just basically we don't need them. Man, we're in like the top of the first inning. You know what I mean?
Yeah.
It's
Yeah. It's still, I don't even know if we're out of the national anthem yet. I think we're
right,
still,
right. We might not be.
we're entering the stadium. We're getting a hot dog. We get some mustard on our
Yeah,
shirt. Like that's where we're at.
right,
We're
right.
not even
And
getting warmed up.
no, and it's like, man, and it's gonna happen so fast, and so that's where I think the money sees that, right?
Yeah.
The guys behind the curtain see all this, and I just think it's a train that's not gonna stop, and we just got to be we got to be prepared for, like, this is the world that's coming for us. This is what we're gonna live in
Yeah.
going forward, and when the whole boomer bust bubble question, it's depending on how you define what a bubble is. Yeah, there's gonna be a bubble aspect to it. Like, not all of these projects are gonna work.
Yeah.
Somebody's gonna win. Somebody's
That's
gonna lose.
that's the
That's
natural way
right,
of
right,
any new, I don't want to use the word fad. That's not the right word, but any
right,
new, wave that's kind of coming in where it requires a lot of capital investment. You saw the
right,
same thing in shale. Think about how many
right,
companies went bust, like over 200,
right.
if not
But
more.
shale is very real and impactful, though. The
Yeah.
U.S. is the number one producer in the world because
Now
of
that we get to the
shale.
other side of it, we've got much cheaper energy, right?
Right,
So,
right, right.
but yeah, so on the
Yeah.
case for durable growth, infrastructure holds lasting value. So while the
Mhm,
GPUs do depreciate fast, power, pipelines, property, it's those who own the generation, the transmission, the interconnects. And I'll even go a step further and say those who have existing rack space, that's valuable. We've seen that play out with
mhm,
CoreWeave, Core Scientific, CoreWeave, Galaxy, TeraWolf, Google. The list goes on and on and on. And now we've seen that reflected in the stock of like public Bitcoin mining companies that are now
mhm.
leasing out rack space for GPUs, Bitfarms,
Which we
Iron,
told you this is gonna be happening.
all of this. I mean, since Bitfarms came on the podcast, their stock's up like a
Yeah,
lot.
I know. I love it. Now they've pulled back this whole convertible note thing as it was a bit of surprise because they were freaking ripping, and yeah, that the dilution of the shareholders took a freaking big old chunk out of it. But I'm sure there'll be another leg coming up. I hope anyway.
Yep. So I think the the truth is somewhere in the middle, which we just kind of went through, right? So macro
Right,
trend, AI and compute demand is durable, it's foundational, it's global, it's completely undeniable, right?
right.
And then you have the micro behavior of unqualified builders, speculative capital, frothy valuations, which definitely has characteristics that are
Of a
associated with
bubble.
previous
Right,
bubbles, right?
right.
But I think that's also just the way things go,
Yeah, it is. People get
right?
excited about new things that are going to be big, and everybody wants to jump in, and so it ends up getting frothy. Man, this is nothing new. It's a pattern that never goes away.
Yeah.
And but yeah, like you basically been saying, is this is not this isn't a fad. This is a paradigm shift, and it's not going to go anywhere. And going back to my, first love of the topics we're discussing, Bitcoin, I think long term this is only bullish for Bitcoin.
Yeah.
Is when we've got an economy built on artificial intelligence that transacts, basically over the internet, doesn't it make sense that the hardest form of money is going to be Bitcoin?
Yeah.
Like
It would
the
be very hard to make a case
transactable,
that, there would be this entirely new currency that
right?
AI would transact with or AI agents would transact
Right.
with when Bitcoin could serve that purpose more
Especially when you still
effectively.
have, right, you're still going to be transacting cross borders, right? And that's where the CBDC stuff, which I'm obviously 100% against, that it's still a problem. Bitcoin's not, man. Bitcoin fixes that. So I think it is going to be bullish for Bitcoin, and yeah, it's not something that's going away. It's not a bubble in the sense that it's not going to exist anymore. and that's just some passing fad. It I think the way you put it on here is perfect. It's very real with little bubbles inside of it that are basically restricted to different companies, but the way of the future is certainly going to be heavy AI.
Yeah. There's a lot of winners regardless.
Right.
Obviously, Nvidia is up just massively. AMD, TSMC, so the chip makers, kind of as a whole, are going to be winning, right?
Right.
Power providers, anybody who controls molecules, megawatts, and delivery. Infrastructure owners, those who own and operate generation, grid interconnects, and land. And this is a huge opportunity for energy companies to be able to reinvent themselves. And I think
Mhm.
that I've been very, very critical of just the incumbents in the energy industry who put their blinders on and say, we're good at what we do and we're just going to stay focused on that. And there's a lot of power in that. However, you've been gifted the best opportunity ever to be able to rebrand, from being an oil and gas company to an oil and power company, and a power company that powers intelligence, the most valuable thing in the world. This is a better way. You go from being a price taker to a price maker, and it's a paradigm
Mhm.
shift for the business model, particularly those in oil and gas. And so yeah, I would like to see more that you've seen the tides are changing. You've seen companies that are coming around, some of the companies that we're talking to, and
Mhm.
partnering with on our sites, which we'll talk more about when the time's right. But you should see more of it, right? And there shouldn't be as much resistance to it as there still is. It's mind blowing to me that people still haven't wrapped their heads around that. But as we've been talking about, booms and busts are a feature of capitalism, not a flaw. And every great leap forward starts as a frenzy and ends as a foundation. That was true
Whoa.
of shale. That was true of railroads. That was true of telecom. The list goes down the line, right? It's proven to be true through every single boom that we've had,
Dude, who
right?
who wrote this? Was this AI or was that you? Either way, it's great.
We'll never know.
Hey, you still had to prompt it. You know what I mean? You still got to. That's people got to understand how to use it. You know what I mean? That's gonna be a show for another or a topic for another show too. But learning how to use AI on an individual basis for your own personal and professional goals is going to be critical to separating yourself from the future.
100%. It blows my mind when people haven't taken the time to really learn, right? I mean,
Hmm.
that applies to everything, not just AI, but I think
Right.
most people just are kind of on autopilot with their life and they're not a student of the things that are
Right.
going on around them. And obviously, it's different for us. We work in it. We're obsessed with it.
Mm.
But this has been fun. This has been fun. If you guys
Yeah,
like the
man.
format, let us know. I think that kind of just these are the things that I think about and you think about, and we read about and we obsess about and stuff. And so I think this has been fun. Just gonna be able to talk through it this way. So yeah, let's do some more episodes. We gotta give the people what they want.
Give the people what they want. All right. I like it. Thank you guys. Jake, well done.
Like and subscribe. Leave us a rating and review. Share with your friends. If there's anything you want us to talk about, let us know. We've got a couple more shows kind of planned out. And so we will catch you guys on the next episode.
Later.